Hello everybody and welcome to No Finance. Today we're going to talk about dollar cost averaging. Now simply put, dollar cost averaging is taking a sum of money that you have, maybe you've saved it, it's your bonus, you've inherited it, however you've gotten this money, you take the sum that you want to invest. So for this example, I've chosen $12,000 and I've decided that we'll invest the $12,000 over the next 8 months. 1, 2, 3, 4, 5, 6, 7, 8, which is $1,500 per month. Now the reason I've chosen these numbers is because anything under $1,500 I think is too small a sum to invest because of the fees that you will incur on your brokerage trades. So there are exceptions to that rule. There's increasingly more and more ETFs and mutual funds that are free to trade on various platforms such as Schwab or TD Ameritrade or others. So that rule might not be necessary depending on the transaction costs per trade. But in my experience, anything less than $1,500, it just makes the percentage that the fee is too high. And when you can expect 8 to 10% on average in the markets, you know, if your transaction fees are over 1%, that's just, in my mind, that's too much. So let's jump into the example. So let's say that on the first month, as the example shows, we invest $1,500 right here. All right. Now, we have no idea where the market's going from here. It could go up or it could go down. Now, the reason we don't want to put all 12,000 into the market, imagine a situation, and this has happened to countless people over the years. You know, our parents, this happened to, you know, in 2007, 2008, you know, a lot of people my age, you know, we were about to go off to college, and the money that our parents had been saving for years was overnight worth a fraction of what it was before. So imagine a situation where you put all $12,000 that you've been saving into the market, and the market dives. That would suck, right? And so instead of putting yourself in a situation like that, I think it's better to dollar cost average. So if we put $1,500 into the market here, and the market takes a nosedive the next day, I mean, we're not happy, but guess what? We still have a ton of what I call dry powder that we can still invest. So let's stick to this. Let's stick to the plan, though. You know, don't, even if the market goes way down, don't go throw all the rest of the money you have in there because it could keep going down, right? So let's say this happened, right? Well, we would put another $1,500 in right here, and then let's say that the next month goes up. Well, another 15 there, right? So at this point, you're 3 months in, you spent $4,500, another 1,500, another 1,500. Now, another advantage that you might see by doing this, when the market goes down, we're not necessarily upset about it, right? Because we're buying more shares of stock with the same amount of money than we otherwise would have, right? So let's say the market goes up. In this situation now, you know, we are having to pay more per share with this new 1,500, but all the stock we've bought down here is now worth more, right? Same here. Same in this situation. So now we're paying more per share than we did here for this month, but all this stock that we've bought previously is now worth more. And then let's say that the next month goes up again, right? So even though, well, not exactly the same, but even though the stock is now almost back where it was in this hypothetical example, we've just got a lot more bang for our buck by doing dollar cost averaging than if we would have just put 12,000 here, right? If we would have put $12,000 in the market here, even if 8 months later, after a crash, it's almost back to where it was, you're still only at about $12,000. But by dollar cost averaging and putting in $1,500 every month, the value in your portfolio is a lot higher than if you would have only put in the 12,000 on month 0 or this time 1 or the first time we invested, because you're buying many more shares with the same amount of money because the price is lower. So I hope that makes sense to you guys. This is dollar cost averaging, and drop a comment on this video or go over to the Instagram page No Finance and drop a DM or leave a comment, and I'll be happy to answer any questions or clear up any confusion if this wasn't clear. If you haven't yet, please subscribe to the channel and turn on the notifications. We're going to be posting a lot more videos a lot more regularly, so we'd really appreciate that. And also, let us know what other videos you like for me to make. There's tons of topics out there. I'm trying to cover as many of the basics and a lot of the, I think, most important and relevant strategies that there are. But I'm happy to make not any video. I'm not going to commit to that, but I love video ideas. So leave those comments or send a message on Instagram. Until next time, guys.